Hi, welcome to the Market Alert for Wednesday, the 9th of April 2025. Stocks pump and dump as Beijing's nope trumps Besant's hope, and the plumbing of the financial market is starting to seriously crack. US stocks are wiped out early gains with reciprocal tariffs set to take effect, according to New Squawk Asia, and S&P closed beneath the 5,000 level for the first time in almost a year as China faces a tariff rate of 104% at midnight last night. And Trump, I know what the hell I'm doing. Trump defiant as worldwide trade tariffs come into effect. I will say no more. And economic news for today, FOMC meeting minutes this evening. There is no prospect of a rate cut at the moment, although that's what Trump is trying to force Powell's hand to do. We do have, I'll cover this while I'm here, we do have a weaker dollar though, as the trade tariffs have come into effect at midnight, so the dollar down there. Right, let's have a look at the markets for yesterday. Let's look at the pump and dump and kick off with the Dow. And in the Dow, yesterday the market did pump, but it's also dumped, and overnight the market is lower as well. The only interesting thing here, which is an important observation, is that we have the market currently coming down to an 89% retracement, if not already sitting on it yet. It's just there. So let's see if the market will hold at this level. If it fails to hold at the fib retracement of 89, then we can expect the low there. I'll just get rid of those now. The low of 36,597 to be taken out. And if that's taken out, then we need to switch to the monthly chart. As you'll see there, we've got the next downside target is the 50 EMA. That's currently coming in at 30, well, make it 36,050, that sort of area. Weekly chart, well, you can see what's happened so far. And you've got the 200 MA there as well, so watch that as well. Right, let's have a look at the DAX. And in the German DAX, we've got a similar picture. We can see there that the market's trying to come down. 89 is 18,989, and then we've got the low. I'm just looking at this and thinking, wow, it seemed such a massive task to get above 20,000, and now we're talking about 18,807 there as a pivotal level for this market. And monthly charts, again, the 20 bar moving average is really important there, along with the 78% retracement. 78% retracement there. 30-minute charts, well, it was sideways yesterday morning. I thought the market had calmed down. We then got the up move that I spoke of yesterday morning, and then as the introduction of the tariffs became closer, and then of course China being hit with 104, and they've retaliated as well with a similar amount. So that's really going to screw the Walmarts and etc. in the US, isn't it? It's where they buy all of their products from. So yeah, the DAX retracing there, and also putting in an 89% retracement at the moment. There you can see 78, 89. Also happens to be at yesterday's low as well. So you're going to try and hold this as much as possible. If it breaks it, then we move lower in the daily chart. And then if we go back to the monthly chart, we've got that 20 bar moving average that needs to be held. Let's have a look at the S&P. In the S&P, similar to the Dow, it's at 89% or 78% retracement. It needs to hold the recent low, as you can see there, and that's 4807. I think we were right up there at 6147. The markets really have had a pounding. So 4807 in the monthly charts. We're at the 62% retracement at the moment. Then you've got that 50 EMA weekly chart. Not a lot there to report. It's better off just looking, at the monthly chart, seeing where you are in the bigger picture. Still not giving up much of the gains. It seems bad, but look how much it's put on. So it's a small pullback at the moment. If we get down to the January of 2022 lows, then it'll be an issue, and also the lows of 2023 as well. Right, let's have a look at the FT100, see if this is worrying Rachel from accounts yet. I very much doubt it anyway, but there we can see the market retracing. And again, the important thing here is to hold Monday's low, simply because, of course, that's where the market found support with the carnage that ensued. So 7531 is what we're looking at there. And then the 30-minute chart, you can see that, again, sideways, market moved higher with the Dow and then moved lower as the tariffs came into effect, or were due to come into effect in that retaliation by the Chinese. So having looked at the dollar, let's have a look at the metals. We'll kick off with silver. The market is attempting to move higher. I think we could see a retest of this low, to be honest with you. The market at the moment is sideways to higher, but I wouldn't be at all surprised if we didn't see another run down towards the 28.31 or 28.50. At the moment it's moving up, it just needs the US dollar to move higher, and then they will use that as the excuse. Yesterday was steady, but then they couldn't help it, could they? They still sold off, found support. Asia's moved the market higher. We're nearly up to yesterday's high, but we're already starting to see some weakness coming in here. Meanwhile, in the gold market, prices steady, nice and sideways there, but we have been back below the 3,000 level as well a few times. We're at the moment with 30.13, so it's not out of the woods at all, but it is holding at the 50 EMA at the moment. 30-minute chart, again, couldn't believe it yesterday afternoon when I saw this happening, and then the markets obviously making their way back up after another period of sideways movement, and also getting down to Monday's low. It's Wednesday today, isn't it? So yeah, gold looking all right. Let's have a look at the gold-silver ratio. And this is interesting because we're back over 100. Yesterday the market went back over 100 pieces of silver for 1 ounce of gold. And that's not a problem for me. I'm quite happy if it wants to take it back up to 126 like it did back in the COVID period that we had 5 years ago last month. The silver gold silver ratio traded up to 126, which you will have seen if you're a regular viewer of the market alert. So yeah, gold, silver. Moving back up means silver's weaker than gold at the moment when you actually see that happening there. Right, so have a quick look at yesterday's trades. The first thing to note before we look at that is that the volatility remains high, which means that you are still getting price bars of 50 to 60 points over 1 minute. And obviously the volatility, the spreads have increased as well. Some of the spread bettors have a floating spread where it can deviate anything from 10 to 30 points, which again obviously is a massive expense. So it's not really worth it. You want spreads as the minimum you can get. So at the moment, 50 to 33. This is still very high at the moment. So an impact on the trades at the moment. It's no good adjusting the the size of the bars for the signals when the spreads can be fixed at 8 and above, or if it's even worse when they're actually floating. So one big bar and then they adjust up to 14, 15 points. So it's not worth it. Just keep the gunpowder dry, wait for the markets to settle and then get back in. But the activity for yesterday, again, it did settle down a bit more. You can see these 2 minute bars where they're just putting on 50 points, in 2 minutes. I'm not saying not trade it, but it's a massive gain to a massive expense if you're in and out all day to try and make up. Market did move lower, and then we got into the cash market, and again it's a perfect example. Market dropped 200 points within less than a minute, despite this being the 2 minute chart. And then you can see it calms down a bit at the DP, and then we move up, and again you've got these bars that 50 to 100 points, which is great if you're on the right side of them, and you can get a decent narrow spread with the brokers. So there's the yesterday, just whizzed through this, the market moving up, and then of course the US came on stream, and then the tariffs, the retaliation by the Chinese over the tariffs, then sent the market moving back to the downside into the evening and then later on. But a quick look at where we are now. Well, during the recording of the market alert, we can see that prices have taken out the low. They've just done this, and again that bar alone is 40 points driven through and moving lower there. So again, just keep an eye on this market. It's worth watching just to see the volatility for sure. And I mean, if you want some real excitement, then have a look at the Dow in the afternoon, and also particularly this afternoon when it opens as well, if you want to see some trading range and volatility. It's certainly not traders doing it, it's computers that are doing these trades at the moment, no doubt, all with the assistance of AI as well. So there we go, market down currently, and some selling there just appearing, so watch out for all of the pivots and psychological areas. And also Powell speaking tonight. And again, expect further news during today as well, with any sort of retaliation with regards to anywhere else in the world, because the tariffs now are in full force. So that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.